Hello, and welcome to My FinHub, your go to channel for simple, practical, and no nonsense financial advice. Today, we are talking about a decision you should take with your money, considering the up and down circus of stock market since last few months. You must think about this at the start of new financial year. It may be bonus money from your employer or otherwise you have saved up an amount. These amounts are now available for investment, but you don't know what to do with it because markets are doing badly. With the Indian stock market looking uncertain, at least for the next few quarters, is it wise to take risks right now and buy stocks or mutual fund, or should we play it safe and reduce our liabilities? Let's break this down in a simple way. But before that, don't forget to subscribe to My FinHub for more such easy to understand financial content. Why do you need to think about this now? First things first, let's talk about what's happening in the Indian stock market. If you've been following the news, you'll know that the market cycles are not very supportive right now, at least for retail investors like us. Stock returns have been tapered, meaning they are not giving high returns like they did in the past. The markets are unpredictable, and the next few quarters don't look very promising. If you invest now, you might have to wait years to see good returns. Next important factor is the latest developments in income tax rules and regime. Everyone knows that government is pushing us towards new tax regime. New tax regime has been made quite attractive for an average taxpayer. It brings more simplicity and reduced taxes burden overall. One of the major difference between old and new tax regime is new tax regime does not offer any benefit to taxpayers for home loan principal payment as well as home loan interest payment. Still, for most of us, even for those with home loans to repay, if you do a simple calculation, new tax regime still saves tax even without any house property benefits. So, the question arises, why take unnecessary risks when you have another smart option? Let's look at the alternative. For most middle class families in India, a home loan is the biggest financial commitment. EMI payments take away a huge chunk of our monthly income. So, wouldn't it be smart to reduce that burden when we have extra money? Either increase the EMI or, better yet, pay off a chunk of principal on home loan at once. Here's why paying off your home loan might be a better idea right now. 1. No more tax benefits on home loan. Earlier, we could get tax deductions on home loan interest, rupees 2 lakh per year, and principal repayment, rupees 1.5 lakhs under Section 80C. But with the new tax regime, these benefits are gone. So there's no extra tax advantage in keeping a home loan. 2. Guaranteed savings. Stock market returns are not guaranteed. But if you repay your loan early, you are guaranteed to save on interest costs. For example, if your home loan interest rate is 8% per year, by prepaying, you are getting a risk-free return of 8%. 3. Less EMI stress equals more peace of mind. Imagine a life with lower EMIs or no home loan at all. That's financial freedom. No more worrying about job loss, market crashes, or economic slowdowns. 4. Higher eligibility for future loans. If you clear off your home loan early, your credit score improves and banks may offer you cheaper loans in the future for other needs. Let's take an example of Rohan, a salaried employee earning rupees 1.25 lakhs per month. He has rupees 5 lakh in savings and is thinking of either investing in the stock market or using the money to repay his home loan. Rohan's home loan interest rate is 8.5% per year, and the stock market is currently giving 6 to 7% returns with a lot of uncertainty. If Rohan invests in stocks, he might earn returns, but there's also a risk of losing money if the market falls. You never know what is Trump or Putin are going to do next. But if he prepays rupees 5 lakh on his home loan, he immediately saves interest on that amount. No risk, no stress, just pure savings. Not only that, Bank's mortgage on his house will end much earlier now. So, what should Rohan do? You guessed it. Paying off the home loan is the smarter choice right now. No, we're not saying that lump sum stock market investment is always bad. It makes sense if the market is in a strong bull phase, which it isn't right now. You have extra money after covering your emergency fund and liabilities. You are willing to wait for the long term, 5 to 10 years. So, if you already have a solid financial base and no home loan burden, then investing in stocks can be a good move. But for most middle class Indian families in such conditions, reducing liabilities first is the safer option. And yes, we are certainly not saying that you should stop your SAPs, let them build wealth for you. So, what's the final verdict? Take a piece of paper and open that calculator in your phone. Decide for yourself. Paying off your home loan makes more sense for you, or you are still fine with pushing that amount in stock market. Think, what is that option which will take you to financial freedom sooner, considering today's stock market and income tax situation? Do let us know about your decisions in the comments. If you found this video useful, hit the like button, share it with your friends and family, and subscribe to my FinHub for more such easy to understand financial tips. Until next time, stay smart and make wise financial decisions. Bye for now.